Buy more, sellout troll on? What Elon Musk's next move will be in his standoff with Twitter is the question on the lips of the most connected people in Silicon Valley and Wall Street this weekend. This is the type of process that's going to become incredibly disruptive and drags on, says one former high-ranking Twitter executive, observing happily from the sidelines. It could be any of the three above. Or a mix. Or something else entirely. On Friday afternoon, Twitter's board said it had approved a poison pill strategy, a move public companies have used since the 1980s to protect themselves against encroaching investors like Musk. Musk has offered $54.20 a share for Twitter, valuing it at around $43 billion, and a poison pill signals the board doesn't think it's a good enough offer. That represents a roughly 38% premium over the point Musk disclosed his Twitter stake, but nearly a quarter less than the market value Twitter stock had as recently as last July. Based on conversations with analysts, people at Twitter and those who've worked there in the past, here's an educated guess as to the possible scenarios ahead. It's tough to be sure with Musk, the guy who once joked about privatizing his own company and made his bid function as a weed joke at the center of it all. Speaking at a TED conference Thursday, Musk insisted he had a plan B. And while he also insisted the $54.20 a share offer would be his last and final overture, it's certainly possible that Musk, the world's richest person, could afford to keep pressing down. He'd need to sell Tesla stock or take out a loan to do so, and he has said he has brought on Morgan Stanley to advise him. His proposal has gotten a lot of support on Twitter. For a guy who lives on Twitter and likes to bask in the attention of his 81 million followers there, this is important. And a significant portion of the Wall Street analysts who follow Twitter stock think it's a good price. We realize that a take-it-or-leave-it offer is not ultimately how shareholders or a board of directors want to negotiate, but we would urge both to take this offer and run, says analyst Michael. As it turns out, he was being serious about the last and final nature of his intentions. This was all some sort of expensive digital performance art / trolling.